maintain this rally so far today?
We're getting close though to a bear market in oil. We're just
That's the question.
4% away.
Is the oil fever over, at least for now? Joining us with their thoughts, Brad Samples. He's commodities analyst for Summit Energy, and Kevin Kerr is analyst and editor for Resource Trader Alert. Good to see you guys. Thanks for joining us.
Yeah. Thanks.
Brad, what's going on, do you think?
Well, I think there's a lot of uncertainty out there right now. It's all going to hinge on the economic outlook. It's poor, and that's all been built into the price. I mean, we've come off $20. I think that's purely a reflection of deteriorating economic outlook for the world. But
more to come?
I'm sorry?
More to come?
Potentially. I do think that we'll probably see some consolidation around this level, around this 120, 125 range for a little while, until we see more evidence that the demand destruction is not simply limited to the OECD economies. It's got to filter over into the emerging markets, and maybe past the Olympics we'll start to see that.
Kevin, what do you think? Do you think the Olympics are as crucial? Where do you think the price of oil is going?
No, again, that's just like the Goldman Sachs report said today. A lot of this demand destruction is transient. It's not permanent. And we have seen a parabolic run-up in oil, of course. At 122, when we originally hit that, I felt that would be the temporary top. Of course, we extended that, and now we're correcting back to that level. I agree.
In fact, Goldman Sachs, in that report you're citing, sees oil back to 149 by the year's end. Do you see that?
Yeah, I agree with that as well. And again, I think there may be more room to correct here. As has been pointed out, there's not a lot of support below this level. So if we do test that, we may run a little bit lower, but it's not going to hold that level, and it's going to creep right back up. There's a lot of things that can push it there.
So, Kevin, you don't believe when we see this decline in usage here in the United States and people driving less, you think that eventually people start driving more? Why do you think the demand destruction is transient?
Well, again, at 140 is where the level where we started talking about drilling offshore. It took that level to even get those conversations started and people actually going out and looking at hybrids or maybe even thinking about carpooling, and they aren't even doing that yet on an extended basis. A small 2.5% reduction is really a drop in the bucket, especially compared to worldwide demand. So I think, again, back down at these levels, people back off from those conversations, and we're right back in the same boat we were in when we originally ran to 150.
So, Brad, for consumers, is this as good as it's going to get right here, do you think, for the year?
I think it could get a little bit better, but I agree. This isn't probably a permanent shift we're seeing. We're seeing some behavioral changes on the part of consumers, but in terms of a long-term permanent shift away from SUVs, I mean, sales are down, but those could rebound. If we get back to $2 gasoline, those will be right back up.
One of the variables we haven't gotten to is the role Congress potentially could play in all of this as they continue to investigate the role that speculators or pension funds or the big money that has found its way into this market looking for a profit, the role that money has played in all of that. And if they decide to legislate in some way that minimizes their role in that market, what could happen then, Kevin?
Well, it could be disastrous, really. I mean, whenever we've seen government get involved in the free market, it rarely has a positive consequence. But, all of this kind of, and I give credit to the regulatory agencies. They've been doing some good investigations. If they uncover something, terrific. But I think this last week, when the CFTC came out with these charges against this Dutch company, was made into the whole cause of the run-up for oil. And that is really distracting from the real problem, which is demand and low supply.
All right. Good to see you both. Thanks for joining us today. Appreciate it very much, Brad and Kevin. And next half hour, you and I are going to look at ways to beat the bear.
Yes,
with
when it comes to oil stocks, exactly.
Oil stocks have suffered as oil has come down.
They are rebounding a little bit today, but is this the time to get in when you see the price of oil declining?
Exactly. Another way to beat the bear is it with Disney, which reports earnings after the bell.
Later in the show, we're going to take a look at